Tesla has been famous for vertically integrating a lot of their business. Everything from making more of the subcomponents that go into their cars themselves rather than contracting it out, all the way to making their own battery packs and drivetrains and motors and everything else. So it shouldn't be a surprise that Tesla is also venturing into insurance, car insurance for their cars. But it hasn't really been talked about very much, and I haven't made a video about it on my channel yet. So today I want to talk about their secret plan for insurance, and we're going to break down what insurance is, how it works, why it's going to be a good idea for Tesla, and the real reason why it's going to be brilliant for their business going forward. So that is what we're talking about today. But as always, before I begin, thank you so much for tuning in. If you're new, hit that subscribe button and the bell icon so you don't miss our future videos. We're a channel dedicated to the future of technology, energy, and transportation. I'm Ricky, and this is Stupid Da Vinci. So first of all, Tesla has already launched their insurance product and it is live, but it is only available in the state of California. So if you live anywhere else, you'll have to wait, but I think eventually it'll reach you too. According to the IBIS World website, the automotive insurance business has a market size of over $288 billion here in 2020. So clearly that's a big piece of the pie, and it would behoove Tesla to get some small little slice for themselves. If you make the safest cars in the world, it really benefits you to cover them because, again, the safety of your car is really will determine how many claims you'll have. We'll talk about that more in a second. But let's just talk about how safe these cars are. According to Tesla's website, they have a safety report published for the Q4 of 2019, and they state that for every Tesla with autopilot on, there is one accident per 3.07 million miles. For those drivers with autopilot off, but all the safety features, all the active safety enabled, that number was 2.1 million miles per one accident. And for Tesla drivers without autopilot or any safety features turned on, that number was 1.64. To put that into perspective, the average car, based on NHTSA's data, shows an accident every 479,000 miles. That just means that you're 3.4 times less likely to have an accident in a Tesla with all of your safety and autopilot turned off. And for a Tesla driver with autopilot turned on, you're 6.4 times less likely to have an accident. So for anybody who's wondering, oh, how safe is autopilot and the self-driving stuff? It's pretty safe compared to a human driver. So Tesla also has data on fires that happen to their cars. So from 2012 to 2019, there was one Tesla vehicle fire every 175 million miles. In comparison, the National Fire Protection Agency and the Department of Transportation shows in the US that there was a vehicle fire every 19 million miles traveled for the average gasoline car. So Teslas are 9.2 times less likely to catch fire than a gasoline car. So you got this great product, you're a new business, they're very safe, you've put a lot of work and effort to make them safe, and you want to get into the insurance business. Before we talk about their secret plan, if you will, and what it's going to mean for them, let's just break down how insurance works and why this is going to be a great idea for Tesla. Insurance companies are for-profit corporations. That means their goal is to make as much money as they can. And if you look at the world's billionaire list and you rank them by the type of businesses that they were in, you'll find that being in the insurance business is pretty lucrative. So that shouldn't surprise us. And for a hypothetical, let's say that I decided I'm going to create the 2-bit Da Vinci insurance business. And so my job would be to make as much money as possible. And I can do that in one of two ways. First of all, I need to find as many clients as I can who need to insure some thing, whether it's their house, their car, themselves. To insure them, I'm going to charge them a premium or a monthly payment, and that amount will depend upon the level of risk that I'm taking. Let's say I'm going to sell flood insurance to somebody in Houston, Texas, where floods are fairly common. I might charge them $1,000 a month for the privilege of having that insurance. Whereas I sell that same exact insurance to somebody in Boulder, Colorado, which is not really known for floods, I might charge them $100 a month. So that's where the premiums are a function of how well you can assess the risk. So there's a lot of data and analysis that goes into that. So now my business is kind of taken off and I've got my first 100 clients. Let's say I'm charging them $100 a month. That translates to $120,000 a year. So now out of those 100, 3 people had accidents, which required me to pay out on their behalf. And let's say the damages came out to $25,000 per person. So that would be $75,000 total, leaving me $45,000 in profit. But let's say I wanted to get better at understanding why those three people had a problem, and I could find a way to charge them for it. Maybe I charge them $300 a month instead of $100, because there's a more of a risk that something bad can happen, or a higher chance of it happening. That is exactly why I think Tesla insuring their own cars is going to make a lot of sense. When I bought my Tesla Model 3 Performance, I got a couple of different quotes, and I realized very quickly how drastically different my quotes were. I used to have AAA, and AAA wanted $200 a month to insure my car. That's about $2,400 a year. Then I got a quote from Tesla, and Tesla's quote to insure their car was $90, less than half of that. But I actually ended up going with Progressive, because Progressive allowed me to bundle my car, my other car, and my Tesla together. And as a result, my price for the Tesla was about $70. Let's break this down into 1, 2, and 3 and talk about the different situations. Let's talk about why AAA was so bad and my quote was so high. The reality is they haven't updated their models. When you run these sorts of things, you have a model that gets smarter and will take in inputs like how old are you? What's your background? Have you had accidents before? What kind of car is it? How expensive is the car? And they'll spit out a number. The problem with AAA's model was they saw this car, which was a $60,000 car, and they said, well, if something happens to it, that's a lot of money we got to pay out, and so your premium's going to be higher. What they didn't do was account for the fact that these cars have the lowest rate of incidence for any car out there. They might cost more if something happened, but there's way less chance of something happening because of how safe they are. So now let's talk about Tesla. Tesla had a better rate than AAA or other companies because they know how safe their cars are. If you remember, we made a video about this. There was a report that Teslas were experiencing unintended acceleration. And I covered that, and we talked about how it wasn't true. It was like a short seller trying to incite some concerns and things. And what's really amazing about the power of data, Tesla could even show it and prove it. When you're driving your Tesla, Tesla is monitoring all the inputs that they have. For example, your brake position, your accelerator position, the end result of how fast your car is going, the cameras, what's happening on the road, and all of that data. And Tesla continues to improve upon all their systems. So as a result, they can tell, like, hey, this person maybe is a more aggressive driver, this person's a better driver. They'll have data that no other car company can have. State Farm and Progressive are selling these little modules that you can put into your OBD2 port that'll do kind of the same thing what Tesla's doing. But these are opt-in programs, and you can't make people do this just yet. They might in the future, but these are voluntary systems compared to Tesla that has all this data from day one. It even goes further because Autopilot keeps getting smarter with all of this data as well. So recently I was driving my Tesla and the asphalt paving was kind of running diagonal to my road, and it didn't like that. My car kind of slowed down and asked me to take control again. So that happened a few times, but the cool part is Tesla has that data. They anonymize it. They look at the cameras, they figure out why the Tesla made me take control again while I was in auto steer, and they'll be able to figure that out, understand the conditions, better build their models, and then over the air update all their cars. So Tesla's data is not only more thorough, but the end result of all that data and what it means for self-driving continues to get better as well. And to put some of these numbers in context, the numbers that I got for $90 a month roughly translates to about $1,000 a year. Now, if 100,000 of the Tesla owners out there got this insurance, that would be $100 million a year in revenue. If 1 million Tesla owners in the future had it, that's $1 billion a year. This just means that if Teslas are safer and they can provide really good user experience for getting insurance, for example, if I'm buying my car and I can get my loan on Tesla.com and I can get my insurance quote right there and just click, 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 done, my car is shipped, my insurance is online. That is tough to compete with if you're State Farm. Because if you're State Farm, I have to buy the Tesla, take delivery of it, and then call you and compare quotes and do all this other stuff. So that convenience factor is kind of like Apple's App Store, Android's Play Store. You have an in to the customer, and so as a result, you really can't compete with that level of integration. This just means that they're going to have more money in their coffers even beyond the car product. Because if they're bringing in $1 billion a year and they're paying out $100,000 or $200,000 or a couple of $1 million, they're keeping the rest of it, and as a result, they can further accelerate their plans to build more plants, build more cars and models, and just everything else. So just a pure profit perspective, it makes complete sense. But before we get into their secret sauce, the reason why this insurance product is going to be a game changer, let me just take a quick moment and thank all of our patrons. Thank you so much to all those who support us on Patreon. YouTube can be a fickle place where success and views can't be predicted. So it is your support on Patreon that continues to make what we do possible. So thank you so much. And if you want to be a rock star supporter of the show, consider supporting us on Patreon. So, you ready? The secret, the big time reason for why this is going to be a game changer is how it will impact their ability to deliver on self-driving. Here's the thing. Self-driving is going to be really tricky. And I think that there's going to be a few challenges in the next 5 or 10 years to make self-driving incredibly ubiquitous. And I think there's going to be some challenges for full self-driving and things like a robotaxi network. For one, there's a question of liability. You can think of anybody who drives a Tesla as a beta tester. What we are all doing when we put on autopilot or auto steer is we're allowing the car to get smarter. And in these early days, if something happens, let's say I have it on autopilot, I kind of look away for a quick second and I come back and I crash because of autopilot. Who pays for that? If I had State Farm Insurance or some other big insurance company and they found out that I was not paying attention and I collided into somebody, they're going to make me pay. My premiums will go higher and it's going to be really rough on me in order to get my car replaced or anything else. It would also make it difficult for me to get insurance from anybody else. But with Tesla's insurance, what they could do, I'm not saying they do this now, I'm not exactly sure how they handle this today, but I know what I would do if I were Tesla going forward, is I could say, look, when you put on autopilot and you're driving, we'll take responsibility. What does that mean? We know when you have autopilot turned on. We know what you're doing. We know where the car is. We have the cameras. If we have autopilot and there was a mistake in our programming and our machine learning that resulted in a crash, we'll take responsibility. We will replace your car, your premiums do not go up, and you live your life. The reason why that's a game changer is because we need really good data and we need terabytes and terabytes of self-driving data to make these machines really smart. The idea is not that we program the car with every possible use case, but we develop a machine learning model that is so incredibly clever and smart that it can figure out and predict what the car should do. And as we feed more data into it, it will become better and better. But one of the big obstacles will be people. If people are trusting self-driving, but they know that if something happens, they're responsible, that is going to really hamper their ability to use it more often. So if we let anyone who's driving a Tesla know that, look, if something happens while you're in autopilot, Tesla will take responsibility for it, that would really go a long way to increasing the amount of people driving Teslas and using autopilot. And as a result, that right now they have like a 10-year lead on everybody else. If you compare Tesla to companies like Waymo, who have small fleets of hundreds of thousands of cars or tens of thousands of cars driving hundreds of thousands of miles, you can't compete with million Teslas on the road that are all doing this and driving hundreds of thousands of miles a year. So Tesla has a huge advantage, and this could help them get even further along. The self-driving puzzle is a little bit of a chicken or the egg problem. To get really good self-driving cars, we need to have cars that are self-driving on the road now. But if the cars can have problems and people can't self-drive, then we can't self-drive them. And so there's kind of the circular logic going on. But what Tesla is doing is they're spearheading the campaign and saying we're to build cars that are going to handle 90% of the situations. And we'll trust you to drive. And if we can't, we'll have you take over again and we'll learn from our mistake and we'll try to get better. The machine learning model for self-driving is brilliant because my little mistake that my car made today, when they figure that out and they solve that problem, all of the Tesla owners' cars will suddenly know how to do that, even though they maybe have never run across that particular issue. So if Tesla is going to make $1 billion a year on their insurance product, and they have a few incidents here and there, little fender benders and stuff, and they're paying that out, think of it in two ways. One, they have this big pool of money to be able to pool out and send checks to anybody who has any kind of an issue. As a result, people's faith in the self-driving tech will be better, knowing that even if something bad were to happen, usually nothing fatal, just small fender benders and things, that my car insurance is not going to go up as a result of it. And Tesla can do that without having to reach into their pocket in some other way. They could pay for it from their insurance pool of money. And the second way to think of it is, after all that happens, they might still have more money than if they didn't have this insurance product. So this is a incredibly brilliant move for Tesla, and I think this is how we get to full self-driving. We need to understand that liability is kind of a question that people are asking. What happens if something happens and the car made a decision? It wasn't me. Is it me or the car that's responsible? So this gets into technology, but to a bigger way, regulatory issues and laws, whether state or federal, and insurance and coverages and legalities. There's so many concentric circles here, and we need to kind of think about how self-driving is going to touch all of them. But the one thing we all know is that self-driving has to continue to bring the level of incident down. And by the way, as I mentioned, a self-driving Tesla on the road, we've all probably seen that, oh, there was an accident, sure, but there are hundreds of accidents by human drivers every day. And we have to first of all understand that Teslas driving themselves are already safer than people. They don't get distracted, they don't fall asleep or do drugs or anything else. So today, maybe a Tesla in autopilot is 6 times safer than you driving yourself. But maybe 2 years from now, that number is 12 and 20 and 50 and 80 times more likely. And again, the other thing too is this is going to be how technology is going to ramp up. Because if you have a lot of automated cars, not just Tesla, but let's say there's other makers with similar visions and approaches, and we have all these self-driving cars. If you have an older car that doesn't self-drive, your insurance premium is going to be astronomical. Because as an insurance company, I have no problem insuring a self-driving car that's super safe and reliable and well known. And for you, the human that we know will have a crash every 450,000 miles, well, your insurance might be double or triple or 10x, we don't know. But these are the sorts of ways that these technological improvements will really become ubiquitous. And one of the angles that we haven't talked about is insurance. I just think Tesla understands. They have such a grasp on everything. And Tesla does not seem willing to sit around and wait for companies to get hip to what's happening. Tesla's not really all that interested in waiting for AAA to figure out how safe these cars are and how the self-driving feature is going to work. They're not going to do that. They're running a pilot program today in California with really great rates, and they will take it from there and roll it out nationwide, worldwide, and the entire Tesla fleet potentially could be covered, and the liability might even fall on Tesla. Again, this is a speculation. I'm not exactly sure how Tesla will handle it, but in my mind, that's a great usage of all of that revenue from insurance, is to cover something like this, because when you can get full self-driving, the amount of money they'll make then is just astronomical. So to wrap this up, I will end with point 3 that I wanted to make, which was my first company for insurance was really high. They didn't really upgrade their models. Tesla was really good, but Progressive had the best rate. And the reason why is because they were able to bundle home and auto. So I have 2 cars, 1 house. And as a result, by combining all 3, including my good driver discounts and whatever else I had, all of that resulted in a payment even lower than what Tesla was offering. So what Tesla I think should do going forward is start to get into home insurance, because they already sell Powerwalls and Tesla Solar. And so as a result, they're already kind of integrated into people's homes, and that could be an upsell. For example, if you have Tesla Solar coming up, you have a guy come over and say, hey, look, you have Tesla Solar now, your house is worth more. How do you feel about bundling with Tesla? A lot of Tesla Solar customers have Tesla cars, and get a combined policy for your house and your car. And if they start doing that, they'll be able to beat even companies like Progressive that are really hip to this whole thing. And that's where I think they'll go from here. They can become a big insurance player for their products. And I think what they'll do fundamentally is shift this industry. I think the legacy insurance companies are going to be disrupted in a big way. And the reason why is because they'll never have access to the company's data like the companies will. So imagine a world in the future where GM or Tesla or Ford have their own products for insurance. And even if they don't want to get into the home business, they could couple and they can bundle together with companies and say, hey, you offer the home, I'll offer the car, we'll bundle them and we'll handle payments and things. But I think the idea of company A that sits out here and all they do is sell insurance, I think that's going to get disrupted, at least for the car and the home segment. Don't be surprised if our future of buying insurance completely changes. And that last part I'm going to do an entire video about later. So for now, I just want to talk about Tesla's master plan with their insurance. And I believe their master plan for their insurance is to build a model in which they can get incredibly insightful self-driving data to drive their lead in self-driving cars to another level. And I think they're going to do it. So what do you guys think? Do you think this is what they're planning? Do you think that I'm right about this? Do you think I'm completely wrong? What do you guys think? Have you had quotes from the Tesla insurance? I'm kind of curious what they came out looking like. And just generally, if you have other questions or comments or anything else, please write to us. We love seeing your comments, good or bad, and we like to evolve and get better going forward. So that pretty much does it for us here with 2-Bit Da Vinci. I'm Ricky. Thank you so much for watching, and we'll catch you guys on the next one.